Alex, let's talk some Tesla to that point for this afternoon. It seems like Meta and Microsoft, even though the charts look very different, thematically are very similar. Tesla in a world of its own. This one, to me, does still have some of that AI stuff into it, for sure. But like for them, it's way, way down the road in terms of like the robo stuff they're talking about. Obviously, it's here in terms of the robo taxis, but like the way they talk about their humanoid robot and all that stuff. To me, this is still very much a policy play in many ways. So how do we read into earnings on that?
Well, let's tie this to the news that we got this week and frame, what were the big takeaways? Well, the big takeaway was that potentially these models need a lot less compute power to actually be run, okay? That is good news for companies that are investing in chips to build out these models and these different things. So the deflationary aspect and the negative impact, to me, is actually limited to hardware adjacent type plays. It's not necessarily negative. If it ends up being the case, negative for the companies that are investing. It may be negative for Microsoft because it has ties to OpenAI, and OpenAI might have been undercut a little bit here. But as far as Tesla, I mean, if anything, this just gives them a chance to, do more with less, and so, or show that it's possible to do more with less. I don't see how that's at all negative. What Tesla does that's different than many of its peers as well is that it has a successful product that uses the proceeds from, which it is an earnings positive company with a lot of free cash flow, to fund this R&D. So it's not like the Rivians of the world or the Lucids of the world that are trying to just get to break even so that they can survive from an ongoing standpoint. Tesla's already proved the concept. Now it's priced in a way, and this is where it gets a little bit more polarized when it comes to Tesla. Is it going to be a major AI breakthrough winner down the line and come up with some technology that allows cars to drive for themselves, and that's going to take over, allow for autonomous driving, major battery storage breakthroughs and, sustainable energy, things like that? Or is it a car company? Because if it's just a car company, it's overpriced, right? And so you look at its peers in the case of Ford or GM, these traditional automakers, they carry way less market cap and way less, earnings multiples. So that's your downside, is that they don't become a winner. But there's I think a belief that they can. Now, for this particular earnings, you're expecting 75 cents for EPS, again, a positive number. And what we're looking for is $27.5 billion in revenue. So it goes to show they make a ton of money, and they do so in a positive free cash flow way. Then they pump that money back into R&D. They collect so much data, the more cars that are on the road. Yep. They've had this strategy of start with an expensive product and continue to kind of commoditize it and get things more scalable. They have taken margin hits recently, so margin will be scrutinized, I believe.
But every car company has to.
No doubt, and especially when you have a disruptor like Tesla coming in and willing to do that, it's essentially the Amazon model in a very different way. Amazon had no problem, Walmart had no problem cutting into their margins to make things very difficult on their competitors. And then in the end, if you put enough pressure on your competitors, some of them fold or they have to combine, and things happen that put you in a favorable position. But I thought this was interesting, Oliver. Just today, you've had, I'm just counting here, let's call it 7 analysts updates that I'm compiled on my Bloomberg here. 2 of them are neutral, 3 of them are bearish or have like a sell equivalent rating, and 2 are outperform. So even amongst people who look at the exact same metrics can agree to any degree.
All over the board.
From $157 for a 1-year price target to $500.
It's kind of always been the case for Tesla, right?
It has, and it is increasingly polarized. If anything, the fact that you actually have peer perform and neutral ratings now is what makes this different. It used to be everyone was either super bullish or they are super bearish because, hey, it's going to be this breakthrough technology company or it's a car company.
Yeah, the binary make it or break it days are past them, but now the question still, it may not be as binary make or break as it was when they were trying to ramp up production, but when you have the valuation as expensive as it is, there certainly could be significant volatility if the market sees or hears something it doesn't like. And again, but I don't know if earnings are necessarily going to be so volatile because so much of this hinges on policy, and if and when that comes through, maybe you'll get the swing in one direction or another? Give me a last thought.
Yeah, I mean, I don't know that the policy stuff is big of an impact, I think, that you do personally when it comes to Tesla. I
feel like that big rally was, you saw the stock go boing on the election.
Agreed, but some of that could have been, perhaps the risks that were thought if it didn't go that way. And so I don't want to get into, what will happen. I don't think that, the government is suddenly going to, favor Tesla, for example, and that's going to be but possible.
I probably would disagree with you there.
We'll
find
see.
out.
But when we look at this particular company, I think one thing that's always stuck out to me is that earnings aren't as volatile as you think they're going to be typically, because we already know the numbers from a delivery standpoint. And so margin will be scrutinized, and then the words of Elon and team will be scrutinized. But it's not quite as volatile as you think it is oftentimes around earnings.
Yeah, all right, nice. Great analysis and great report. Thanks, Alex. Really good stuff.